vamos a salir de España para buscar un análisis un poco más global de cómo se está viendo la economía. Patrick Armstrong, Chief Investment Officer at Plurimi Wealth LLP. Good morning.
Good morning.
How do you see this moment in the stocks?
I'm actually optimistic for the equity markets. They're very expensive on price to sales, on enterprise value to cash flow. They've never been more expensive than they are today. But offsetting that, you've got a very strong liquidity backdrop. Central banks are buying bonds. They're keeping interest rates at zero and negative interest rates in Europe. So liquidity is abundant and economies are reopening. There's very strong earnings growth. And I think as long as yields stay low, liquidity remains abundant, and earnings continue to grow, I think the path of least resistance for equities is higher. So overall, I'm optimistic. I'm not as optimistic as I was a few months ago, just because equities are pricing in a lot of the good news at this point. But I still think consensus underestimates how strong the recovery will be and how strong earnings growth will be, particularly with the cyclical companies.
Do you prefer now Europe or United States?
In our global portfolio, we've got a big overweight in Europe and a big underweight in the United States. There's a lot of American companies we own, but the MSCI World Benchmark has a 60% allocation to the United States. We've got about 35% right now, and we've almost got about 35% in Europe. So versus the MSCI World, we prefer Europe, but in our portfolio as a whole, we've got about an equal weight between Europe and the United States. Europe is behind America in its vaccine rollout, but it's catching up. And the stocks generally are cheaper as well, which is very attractive. A higher dividend yield, lower PEs in Europe, and growth won't be quite as good as the US, but I think Europe will be catching up as the vaccine rollout does happen.
Are you worried?
Not that worried. There's a few things that I worry about. I'm not worried about the economy. I think the economy is on such a strong trajectory. I think manufacturing is very strong. Services is very strong. Something that disrupts that growth would be unexpected. So you always have to worry about it when you're an investor, that we have a mutation in the virus that the vaccines don't have a strong efficacy for, or some geopolitical risk. Those kind of events aren't something you can plan for. There's something you should always be aware of. Those are the things that I think could disrupt the market. Or central banks turning hawkish. And I don't think that's likely. Jerome Powell in the United States has said he wants to see a string of strong employment reports before he considers changing his policies. And the last two jobs numbers in the United States have been relatively strong, but they've missed expectations. So the biggest risk for me that'll probably send the markets into a correction is when the Fed does change its course and slows down its bond purchasing and stops its bond purchasing eventually. I don't think that happens this summer.
How much could tapering continue?
How much, pardon me?
How much the tapering could continue in this year?
Yeah. So I think Jackson Hole at the end of August, the Fed will probably announce their plans for tapering. It's inevitable that it'll happen. You can't keep buying bonds at an emergency level when the economy's not in an emergency anymore. So the market will have a tantrum when they announce the tapering. I think they'll lead us up to get us ready for the tapering and what their policy will be. I think August will say, we're not tapering now, but at our next meeting, we're going to discuss it. And then in September, there will be some tapering. And bond yields in the United States are less than 1.5% on the 10-year Treasury. So I don't think the market's ready for tapering. I think it's inevitable it happens. And I think it will be a bit of a tantrum from the bond market. And that'll probably provoke some weakness in equities as well.
Some recommendation to invest in this moment? Some more recommendation?
I think within equities, you want to look at companies and sectors that basically have pricing power right now. And there's a lot of shortages in the world. The semiconductors, the microchip manufacturers, car companies need them, handset producers need them, and there's a shortage of them. So I think companies like ASML in Europe, Tokyo Electron, they produce the goods that manufacture these chips for other companies. And I think that's a very high growth area, trading at reasonable multiples. Shipping companies like Maersk, they've doubled their EBITDA forecast this year just because as the economy reopens, people want goods and manufacturers want to ship those goods, and there's not enough freight available. Freight rates are very high, producing massive cash flow on the shippers. And I think you should have some commodity exposure in your portfolio as well. Nickel, iron ore, copper, all of these commodities are showing great strength. And the companies that produce those are lagging a little bit behind. They've had a strong run as well, but I think they're producing a lot of cash flow, more cash flow than their share prices imply.
Enjoy a good business day. Good day. Good morning.
Thank you.